Hello traders, how are you today? How has been your trading? Hope you are making progress. You're welcome once again to our YouTube channel. If you're a returning subscriber, I want to thank you so much for your support. Thank you for being here and for all the support you give to us to make more videos. Thank you for your likes. Thank you for your comments. I read each and every one of your comments. If you are a new subscriber, I want to welcome you to our channel, and the purpose of our channel is to provide upcoming traders with useful information on how they can become successful in the business of forex trading. And I want to ask that you kindly subscribe to our channel, like our videos, and also kindly turn on the notification bell so that you'll be alerted when new videos are uploaded. All right, you might also want to join our free Telegram group. The link to the group is in the description box of this video. Now let's kindly go into the subject of today. I want to talk about the highest probability supply and demand zones which you should trade. The highest probability supply and demand zones which you should trade. Now you need to know that as a trader, your aim should be to trade the best probability, to take the best probability trade. All right, the reason is because two reasons actually. You need to do that in order to avoid unnecessary losses. Okay, if you take the best probability trades, you avoid unnecessary losses and make more profits. Now, no, there is no 100% guarantee that each trade you take should be or will be successful. All right, but we can say that some trades have a higher probability of success than others. Yes, so I want to actually share with you the best or highest probability and supply and demand zones that you should trade. So when you wait, sit on your hands. The problem with most traders is that they don't know how to wait. Okay, we are not there to take trades all the time. Your business is not to take trades all the time. All right, the business is to wait and take the best trades. All right, so you need to know how to wait when the market is not providing you the opportunity you need, or the opportunity that conforms with your setup or your trading plan. You ought to sit on your hands. Do not take trades that do not comply with your trading plan. So when you do that, your chances of success, your chances of success would drastically improve. Okay, so when you take the best trades, you avoid unnecessary losses, and you make more profits when you avoid unnecessary losses. Now, what are the best highest probability supply and demand zones you should trade? I have about five of them, 5 things you should look out for if you are taking your trades as a supply and demand zone trader. There are 5 best zones that I've come to understand over the years of trading, okay, that work better. All right, number 1 is the fresh, unmitigated zones. Aim to trade fresh, unmitigated zones. I'll be sharing with you 5 types of zones that you should actually look out for, because they have the best probability trades. And number 1 is the fresh, unmitigated zones. In my previous video, I've explained, check my videos, I've explained what mitigation is. Okay, I've explained what mitigation is. If you scroll on the videos history section, you see I made a video on mitigation. All right, as a supply and demand trader or a smart money trader, you should know what mitigation is. Mitigation is actually when the smart money, or rather when the institutional traders come to fill up their pending orders. All right, that is what mitigation actually means. So when they have done that, when a zone has mitigated once, or when price has come to a zone the first time, each time price comes to a zone, the probability, or the how will I put it now, when price comes to each time price comes to a zone, the probability of success reduces. Okay, so it is better to trade the first touch of a zone. There is more higher probability that a supply or demand zone would work for you if the zone is fresh. That is to say, if the zone have not been mitigated, if price has not come to the zone the first time. So it's better to trade the first touch of a zone. It's better. than subsequent touch. That does not mean that the other subsequent touch on a zone or subsequent price retracement to a zone might not work, but the probability reduces each time price comes to a zone. So unmitigated zones refers to zone where price is yet to return to after being created. So it's better to trade fresh zones or zones that price is yet to return to, the market is yet to return to, or coming to the first time to return, all right, to mitigate. All right, so for example, now in this case, now you see this is a zone. This is actually a zone. This supply zone right here was created, and the area I marked, price actually sold, the market sold and came back to mitigate it. So you trading, this trade coming back to take this trade now, the probability of this trade working has reduced. See, when price actually came, it blasted through the zone. It blasted through the zone. So best to take a trade from a zone that is fresh. Here market mitigated this candle came back to mitigate this supply zone right here that was created. Okay, market came to mitigate the zone. So this is not a fresh zone. And so if a trader wanted to take this trade, a sell here, you see this would have been a liquidity sweep, and the stop loss would have been hit at this point. So that shows that this is an example that shows that it's better to take a fresh zone, because this zone is not actually a fresh zone. All right, so now you can also see another example. This is a supply zone in which a trader intended to sell from this point, but you see there have been mitigations around this area. See, the price these candles have been mitigated this zone, and so this is not a fresh zone. This is not a fresh zone, because this candle mitigated it, and subsequent zones was also mitigated, so making this zone not a high probability zone. And so when a trader intended to sell from here, the trade would have resulted in a loss, and you see price blast through the zone, and this resulted in a loss if you had wanted to trade from that zone, that supply zone. Now I will show you an example of a fresh zone that has a high probability of success. Now look at it. Now you see this is a fresh unmitigated zone here, right here, fresh unmitigated zone right here. You can see that there was no candle came, no price have not come back to this zone. So this is a fresh zone, and so when the trader sold from this zone, it was a massive success. It was a massive success. So only look out for fresh unmitigated zones. Those are the zones that have a higher probability of success than zones that price have mitigated, or zones that the market have returned back to. Okay, those zones work better. Fresh unmitigated zones work better. So now I want to look at the second zone you should also look out for, which is zones that are in line with your higher time frame trend. Zones that are in line with higher time frame trend. So it is safest to go with the trend instead of going against the trend. You always know that it's always safe. It's safest to go with the trend instead of going against the trend. So even if you are executing on a lower time frame, if you are taking trades from a lower time frame, it's always ideal or better or wise that you go to the higher time frame and look at, okay, what is the high time frame trend. Do not go against the trend. Okay, if you go against the trend, you'll be fighting, you have some form of resistance, and sometimes or most times those trades taken against the trend do not work out successful. Okay, so if you are executing on lower time frame, always ensure that your trade is in the direction of the higher time frame bias. If the higher time frame bias is indicating a bearish trend, avoid taking buys on a lower time frame. If your higher time frame bias is indicating a bullish trend, avoid taking trade and sell trades on your lower time frame. It's just as simple as that. Now you can see now I've actually done a video on order flow. I've done a video on order flow, so you check that video, it will also give you more guidance. All right, and now is in the video section, the history section of the channel. Now you see this is a bullish trend. Okay, your higher highs and higher lows are created. Higher highs, higher lows are created. That is how you know that this trend, this is a higher time frame bullish trend. While in this case, this is a lower time frame, this is a higher time frame bearish trend. Lower lows and lower highs are created. Lower lows and lower highs are created. So when higher highs and higher lows are created, you are in a bullish trend. And when lower lows and lower highs are created, you are in a bearish trend. Okay, so always ensure that you are, first of all, before you take any trade, first of all check your bias, higher time frame bias. On a H1 time frame, are you selling? Is the market selling? On a H4 time frame, what is the market doing? So that should inform you, or even on a daily time frame, that should inform you the trend, the general, the overall market trend. That gives you the bigger picture of what the market is doing, so that when you go step down to lower time frame of the 15 minutes, 5 minutes, even the 1 minute, you should be able to know the best and the safest trades you should be taking. Now, number 3, highest probability zones. These are zones. Example of higher probability zones, or zones that work better, are zones that are created after a liquidity grab. Zones that are created after a liquidity grab, or zones that are beyond liquidity are most times higher probability zones. So institutions are always looking for ways, or looking for fuel or catalyst, something like a fuel or catalyst to move price faster in their intended direction. And retailer stop losses form this catalyst, all right, form this fuel, or helps to build momentum that will actually push price in the direction that the institutions want. And I've explained these things in one of my videos about mitigation, about liquidity. I've explained it in my liquidity video. Try to check out my liquidity video. You will see how I explained the concept of liquidity, institutional liquidity. I explained it in that video. You check out that video on the video sections of this YouTube channel. You learn more about liquidity, and you understand the concept. And when you are trading, you factor it in your trades. That will help you to have a more balanced view and increase your chances of success as a forex trader, or as a smart money trader, or demand and supply trader. So if there are liquidities, if there is a zone, if you want to take a buy trade now, if there is a zone below a liquidity, know that will be a very good center of attraction for institutional traders. Or if you're taking a sell trade, if there is a zone above liquidity, that will be a very good center of attraction for the institutional trader, because they would want to take out the liquidity in line of their trades, and that liquidity gives them a higher push, give them a very good push for the market to go in the intended direction. Now, this is an example of equal low liquidity. Okay, so this is an equal low liquidity. This is a zone below liquidity, so it's a very good center of attraction. So the retailers, some people would want to, if you are taking a trade right from here, it might not be successful, because you have there's a liquidity right here. Liquidity is, you have an equal low liquidity. So institutional traders will be interested in this zone that is resting below liquidity. So I see how market came down, blast through this zone, and respected the one that is below liquidity, and it bought. Okay, now let's look at another example for a sell trade. Now for a sell trade, these are liquidities. Okay, range liquidities. The market actually blast through this range liquidity and mitigated this zone above liquidity. So if you are taking a sell trade, it's good you ensure that you look at if there's a liquidity, or if there's a zone above your trade, another zone above your trade, and also check if your intended zone is a liquidity. Okay, a liquidity attraction, a liquidity grab attraction for the institutions. If you are taking a buy trade, also check if there is a zone below your zone. If there's a zone below your intended zone, look out and check back and see if your intended zone is a liquidity attraction for institutional traders. Okay, this will actually help you. This would help you to have more higher probability trades. Not all your trades will win. It's sure nobody wins 100% of the time, but when you have this concept, this knowledge, your rate of win will increase, and your losses would reduce. Okay, that is why I'm bringing this up to you, so that you have more understanding about the concept of the high best probability supply and demand zone. Now let's move to the fourth one. So the fourth zone you should also look out for, or you should concentrate in trading, are drop base rally zones. Okay, drop base rally zones, demand zone, and rally base drop supply zones. Those are the zones you should also be trading. So avoid rally base rally zones and drop base drop zones. Okay, avoid those zones. They work sometimes, but they are not the best. Avoid rally base rally zones and drop base drop zones. Okay, the best probability zones are the drop base rally zones and rally base drop zones. Now this might be a new concept to you, but if you have been following me on this, if you have been following me on this channel, I've talked about this. I made a video on that. Okay, when I talked about the concept of understanding demand and supply zones and trading. If I made I made a video on understanding demand and supply trading. So you will see when I explain this in that video about the concept of drop base rally, rally base rally, rally base drop, and all the rest of that. Now let me just give a brief snippet on that. Okay, now look at this. So this is actually a rally. This is this is actually a rally base rally zone. This is a rally. The market formed a base and then rallied. So now if it's not really good to take this buy from this demand zone, all right, that is formed after a rally base rally price action has happened. Okay, this is a lower probability trade zone. Okay, a rally base rally zone. Okay, it's lower probability the demand zone to take a trade. Now another lower probability is the drop base drop zone. Okay, the market dropped, formed the base and dropped again. So taking a trade, taking a sell trade from here might work, but it's not always what the best. So the better or higher probability zone is these two below. Okay, this is for demand zone, this is for supply zone. These are lower probability demand and supply zone. Rally base rally demand zone, this is a lower probability. Drop base drop supply zone, this is a lower probability. But the higher probability are the drop base rally, okay, and the rally base drop drop base rally demand zone and the rally base drop supply zone. In the rally base drop base rally demand zone, the market actually dropped or sold and now formed the base. After forming a base, it now bought. So we are expecting price to come down to this zone so that a buy trade can be taken from the demand zone. Okay, now for the rally base supply zone, the market bought, formed the base and now sold. So we are now expecting price to come back to the zone before a higher probability sell trade would be taken. I don't know if you, I hope you understand the concept. Okay, let me go over it once again. These two up are lower probability zones, demand and supply zones. Okay, in this case the price bought, formed the base and bought again, creating a base. The base is the intended demand zone, but it's a low probability demand zone. All right, now for the drop base supply zone, price dropped, formed the base and sold. Now the trader would want to come to this zone before selling, but it's actually a low probability supply zone. Now for the drop base rally demand zone, the market dropped, formed the base and then bought again, forming a zone. And the intended trader want to take this high probability demand zone, all right, from here. Now for the rally base drop supply zone, the market rallied up, formed the base, and now dropped. Okay, now the trader would want to take a sell trade from this zone, so which is a higher probability zone. Okay, the rally base supply zone is a lower the rally base rally demand zone is a lower probability, while the drop base drop supply zone is a lower probability. But the higher probability zones are the drop base rally zones and the rally base drop zones. Okay, so that is that. So the final zone in my list that you should look out to trade are the recent zones. Okay, the recent zones. So old zones should be avoided by all means. Avoid old zones by all means. Not all zones are recent. Some zones may have been created a long time ago, and the likelihood of price, the likelihood of the institutions respecting the zones is low when the zones have been long. Okay, long. So the longer price takes to come back to a zone, the lesser the probability of success. The longer it takes that for price to come back to a zone, the lower the probability of success. So it's best to take trades from a more recent zones. Okay, it's best to take trades from a more recent zone. When not all supply zones work, not all demand zones work. Okay, if the zone have stayed a long time, if the zone was created a very long time ago, the probability of that zone working out, it will be reduced. Okay, it will be so you need to know that. It's very, very important. Okay, now you might be asking, how do we know zones that are long, or what time frame are we looking at, what time period are we looking at? Okay, let me show you an estimate. So follow these guidelines to know when an old zone's usefulness has expired. Follow this guideline to know when an old zone's usefulness has expired. Number one, for a daily zone, if you're taking trade from a daily zone, when the zone has lasted for up to 90 days, a daily zone might not work. The lower is a lower probability zone. If you are taking trades on an hourly time frame, or 4 hour or 1 hour time frame, after 20 days, that zone, the probability of it working out has reduced because it's now an old zone. If you are taking trades in a time frame that's less than 1 hour, like the 15-minute time frame, 30 minutes time frame, 5-minute time frame, if the zone has been over 1 day old, or is over 1 day old, that the usefulness or the probability of that zone working out successfully has drastically reduced. So these are just saying, this is it's not a hard and fast rule, but it's from observation and from back tracing. Okay, back tracing, back testing. This concept was brought out. Okay, so this concept has worked and has led several. So sorry about that. So this concept has helped several demand and supply traders, and has been a guide for many of us that are demand and supply traders and smart money traders. But that notwithstanding, regardless of these 5 zones, I've given out now, what supersedes them is actually your confirmation. Okay, you need to know how to confirm. You have to obtain what is called a confirmation entry, regardless of the zone you are taking out. Okay, whether low probability or high probability, you need to know how to get confirmation entry to your trades. And I've made a video on how to get a confirmation entry. Just check the history section of my video, and you're going to see I've made a video on that, on how to get a confirmation entry to your trades. All right, now in conclusion, so you need to be patient to only stick to trading the best zones with the highest probability of success, and learn to sit on your hands until you see such zones. Okay, so however, ensuring that you only take trades after due entry confirmation is vital, regardless of the setup. Okay, so I've actually made a video on entry confirmations. So entry confirmation supersedes everything I've said here. Okay, entry confirmation, obtaining entry confirmations to a trade. For the fact that I've pointed that a zone has a high probability does not mean that you should take such trades when a zone comes to that point. So what you need to do in every trade you take, you need to obtain what is called the entry confirmation. Confirm that this trade is going to work out. Okay, that increases the success rate of your trade. All right, so I want to thank you so much. I want to thank you so much for your patience and for viewing this video. I want to also ask that you kindly please subscribe to our channel, share our videos, like if the video was good, and if you really enjoyed it, or if you learn one or two things from it, kindly like this video. Like the video. I want to see your comment. I want you to share our videos, like our videos, and when you do that, it encourages me to produce more videos. Okay, when you view our videos and like our videos, it encourages me to produce more videos for you, more useful content. I have many useful contents in the pipeline for you, but I only release them once when I see that you really like the video. I will make our time to do more of these videos. Okay, I don't really get anything from making this video, but I just do it just as my way of helping upcoming traders. Okay, so you might also want to join our free Telegram chart analysis group, and the link to that group is in the description box of this video. Now I do one-on-one training, one-on-one mentorship course and training for you. Okay, I don't believe in general training, because I know that each individual has a unique learning curve and learning assimilation rate. So that is why I prefer one-on-one training. If you want me to be your mentor, if you want me to train you on forex trading right from the scratch, from the basic to advanced forex trading, I'll do that. Just chat me up on Telegram. The link to my Telegram contact is in this video, the description box of this video, and also in my Telegram group. Or okay, I will actually be glad to be your mentor, and the cost or the price is very affordable. All right, chat me up and let's talk about that. Till I come your way next time, I want to thank you so much for your time.